I want to bring in Mark Travis, the CEO of Intrepid Capital, where he manages over $1 billion. Actually, Mark, let's get your take on this, Icahn versus Fink. Who do you side with?
Well, I think this is the beauty of an indexed world, Betty Lou. You know, with ETFs and Larry Fink's prominence in that part of the business, we no longer care what a business costs or what management does. Just so long as it's part of the index, you have to buy it. And I'm guessing he just has to vote his shares accordingly. So, you know, I think if you go on any holdings on HDS page in Bloomberg right now, you know, BlackRock is one of the bigger holders because of the proliferation, excuse me, it's early in the morning, of ETFs.
That's true. Just index.
So,
yeah. Set it and forget it. That's what I said.
Why bother? Just see what it looks like in the index and, you know, go play golf.
Like you, Mark? Okay.
I'm a terrible golfer, Betty Lou.
All right, hang on one second, Mark, because I want to bring in Mike Regan, who is our U.S. stocks editor. I forgot to mention that you are joining us as well, Mike. Question for Mark?
Well, I'm sort of caught by something else Icahn said, which is that, you know, so many people have loaded into high-yield debt, and if there really is any sign of weakness in that space, that there'll be, I think his quote was, a run for the exits. And I know Intrepid has a pretty good stake in Oaktree Capital, which invests in a lot of high-yield debt. So I'm curious what you think of that. Is, you know, a potential rate increase potentially going to cause a run for the exit, or what is your take on the future in that space?
Well, Mike, I think that credit spreads are very low in that part of the world in financial assets. I think, you know, we're not quite to where we were in June of '07, right before things went bump in the night with the Bear Stearns mortgage-backed fund that kind of set all the fun off. But, you know, I'm kind of the belief that we've boxed ourselves in, or the Fed has, in what we've borrowed. They've allowed the you know, congressional leaders to get by with their profligacy because of cheap rates. And now we've borrowed so much money, we can't afford to pay it back. And not only can we not afford to pay it back, we can't afford a higher rate on it. So, you know, I think it's going to be a long time coming. But, you know, as I mentioned with the Bear Stearns mortgage-backed fund in July of '07, things can happen that we can't foresee from right here.
Yeah.
But I think Howard Marks at Oaktree will be ready and able to take advantage of the dislocations, as we'll hope to do at Intrepid Capital.
So, you know, we were all talking about reading. Did you, Mark, read Bill Gross's letter? It came out today, right, this morning?
His outlook for,
So he sounds depressed.
He does. I think you should send Bob out there with, like...
Yeah, Bob, you need to, like, write...
I'm the clown.
So, Betty, what part of depressed with your own fund with $700 million in it do you have?
Well, so he said, well, good point. Okay, so he says what? He says the super cycle and bull market is over, right? What else did he say?
He sounds like he thinks he's over. And
yeah, I mean, I know.
Reflecting on his own death, it's a pretty shocking commentary.
Right. Well, actually, okay. See, he says, "quote I have a sense of an ending, a secular bull market ending with a whimper, not a bang. I have unrest, increasingly a great unrest. You should as well."
Right. But yet it sounds like he rests well at night. He said he doesn't. 9 to 5 a.m. He's resting fine. So.
Right. Well, so, okay, good for him. Mark, what do you think of that?
Well, I pity Bill for, you know, with as much money as he has, that he's depressed. And, you know, I think you can get a bear market in time. I guess maybe that's what he's inferring. I mean, we certainly had a bull market in financial assets, particularly the last, you know, 36 months. I mean, look at 13 and 14. Took the S&P up 50%. So, you know, I don't think prices are compellingly cheap, and they could stay somewhat elevated and not drop precipitously, but not really make any forward progress. So, who knows what Bill's thinking? But he's,
right.
You know, he's going to be okay.
But you, right? Well, he'll be fine. I don't know about his fun.
He can't take it with him, I think, is what he's trying to say.
Right. Exactly. Okay, but you know, I think, but Mark, one of the things you mentioned too, because you are worried about whether the Fed's box them in, is whether this bull market is, you know, is kind of coming to an end here itself, right? Whether it's getting a little bit long in the tooth. I don't know. I mean, Bo, how do you feel?
If it ends with a whimper instead of a bang,
you know,
I think we'll be okay.
Yeah.
What we don't want is another bang.
Yeah.
And I think that, taking some volatility out of it, that would be fine. It's just the bangs are what we don't need. We've already had 2 of those in the last dozen years, and they are awful.
Yeah, but think about all the things that happened that we couldn't have foreseen. I mean, think about the flash crash, guy with a fat finger on a button and all of a sudden vaporize, a couple $1 trillion. Or who would have thought a couple of Nobel Prize winners would blow up a hedge fund in, September of '98? I mean, or the United Airlines merger wouldn't happen in 1990 and the markets cracked. I mean, there's so many things that can happen, and when you've got cheap money like we have, you've got people levered significantly in margin debt and other ways, and who knows where it'll come from.
So wait, so Mark, what are you, what keeps? It sounds like you're worried about something.
He's worried about you're worried about a bang and not a whimper.
Yeah, I mean, I prepare that prices can actually go down on any given day, and I like to have cash available to take advantage of those dislocations. As I like to say, to be fully invested today means there's no better opportunity tomorrow. And that's not an assumption we make at Intrepid Capital.
All right, Mark, thank you so much. Mark Travis of Intrepid Capital.